All right. Hello, everybody, and welcome to Investing Education Academy, our Wednesday discussion. We're talking today about margin calls. So many of you all are familiar with margin calls. You kind of know what they are. You know they exist. You don't know how they're used. Some of you do use margin calls or margin trading or margin, but you don't know what it means to get a margin call. So we're going to talk about that today. And for everybody who has been listening to us recently, we definitely want to thank you for being in our ecosystem. Investing Education Academy has been growing with the new division with the IEA Crypto Bulls, where we're diving full into cryptocurrency. That has been spectacular. We have about 10 seats left for our cryptocurrency group, IEA Crypto Bulls, our first cohort. So if you are interested, you definitely want to get in contact with Leon and I. We've had three new bulls in the last 2 weeks. So we're excited about that. And we're headed to that point where when this first cohort is closed, the next cohort where we'll be learning, talking about, discussing, masterminding about cryptocurrency is going to go from $200 a month to $300 a month. So if you are interested, just not waiting around, because cryptocurrency is not going anywhere, and the longer you wait, the less money you make, because you might be doing pretty well on your own. But I didn't even know before, I'm meeting some of these individuals. I'm guessing that almost anybody who joins is going to find some gold nuggets that's going to lead them to hopefully higher returns on their investment. So please don't wait if you are interested. Leon, can you tell them why we chose the topic while I do some housekeeping? We're talking today about short or margin calls. And for anybody who's not familiar with margin calls, it's when you invest your money at a given price point. You have $5,000 and you put your $5,000 into a margin account. The brokerage firm that you put your money into or with, you hold your money with, they'll give you a credit for $10,000. So that means your buying power just goes from 5,000 to 10,000. The reason that's important is that it's leveraged money. So if you are using their capital, which is the extra $5,000, you're hoping that the market whatever you choose continues to go into positive territory, because that means that your account grows in value. As long as your account is growing in value, they allow you to trade with their money. At some point, if your account falls below a certain amount, let me see. If your account falls below a certain amount, they enact what's called a margin call. That margin call basically is saying that the brokerage house, you felt like if your account was 5,000 you put in, they gave you an overall amount of 10,000 you could put in, your account value falls to, let's say, 7,000. Now you're at a point where the brokerage house wants their money. And so they want that 5,000 and plus whatever their margin call dictates that you now have to give them. So a lot of people, they're leveraged. They're using the brokerage house's money. So when they get these margin calls, it hurts. And, it hurts pretty bad, because you have to pay them whatever they require. And if you cannot pay it, they will liquidate your account. And they're not going to ask you a lot of questions. It's just a liquidation. So, that really just tells you what a margin call is. I wanted you to kind of have an understanding of it as we dove into this topic. And many of you all said it's storming where you are too. So we're going to do a level set. It's storming where I am, it's storming where Leon is, and it's storming where a lot of you are watching us from. So we're going to try to make this short today and concise, so we can get you as much as we can. But if either one of us gets dropped, just stick around and we'll try to get back as quick as possible. So Leon, I'm going to pull up the slide. What you missed was essentially I just explained how margin accounts work, so people will understand what it is as we go into it.
Okay. All right, cool. Sorry about that. I have no idea what happened. But so the reason we picked this topic was because anyone who's following crypto, if you're following it or you're investing in it, you felt some serious pain last week. Brent and I did. A lot of us in the Crypto Bulls did. But we, as we always say, we found it as a buying opportunity. But there was a reason why the crypto market dropped about anywhere from 30 to 50%, depending on what crypto you're in, over the last 2 weeks. There's a reason why, and the main reason was because of margin calls. So anytime you see like a massive, massive drop in the market, this plays a key role in it. During the COVID drop back in March of last year, this was huge. Like a lot of that force, that huge, like when you see these big gap down, the market drops 3, 4, 5, 10% in a day. That is margin calls executing. And again, as Brent kind of told you, margin calls essentially just where you're borrowing money from your broker to then buy more stock. So the slide we have on the screen, I'm just going to break down what a margin call is and how it works. So when you open an account with a margin account, you deposit, an example we have here, you deposit $5,000, right? But that $5,000 allows you to buy $10,000 worth of stock or crypto. So anytime you get a margin account, you're essentially doubling your buying power. Now, some brokerage allow you to triple or quadruple your buying power intraday. You can't do it overnight, but intraday, like the account I have with Interactive Brokers, I can do 4 times leverage during the day. In other words, if I have $10,000, I can buy $40,000 worth of stock, but I have to have sold that stock before the close of business that day. So it allows for
Leon,
intraday.
real quick, you tell them why you chose Interactive Broker? Because I think some people may not be familiar with the fees associated with margin accounts. And I know you've looked at a lot of different margin accounts.
Yeah. So when you're doing margin, you're borrowing money from your brokerage house. That borrowing that money has a cost associated with it, as all essentially loans do. So Interactive Brokers has the lowest margin fee that I found in the industry. TD Ameritrade's was crazy high; it was near 10%. I don't know if E-Trade even had. I think E-Trade, all the other ones. So
E-Trade has margin. I think they have margin.
Okay, I remember TD Ameritrade was near 10% when I was looking about a year and a half ago. It was the highest I found. It was crazy. I want to say E-Trades was a little less. And then I saw a commercial for Interactive Brokers. At the time, they were talking about their fee was like 1.5% on any amount of money that you borrow. So that to me was awesome. I was like, all right, so I jumped all over that. So that's the reason why I trade with Interactive Brokers. Their user experience is not the greatest. Their app is kind of dated, and their website is too.
But they have a great 1-800 number.
Yeah, their customer service is great, and their technology is awesome. Like their execution is lightning fast. Sometimes you get price improvements. It's just their UX, their user experience, is terrible. But you can't get everything in life. So the reason I use them, Interactive Brokers, is because they have the lowest margin fee. So in our example here, if you open an account with just say Interactive Brokers, you deposit $5,000, right? You can then buy $10,000 worth of stock or crypto. Now, Interactive Brokers does not do crypto, but some of these other brokers out here that are crypto only, like Kraken, they do. They only do crypto, and you can do margin with them. But I'm just showing that you can do stock or crypto with margin. So let's say you deposit $5,000, so you can buy $10,000 of crypto or stock, right? Well, so when you do that, there's something that's called a maintenance margin. And what this is when you get on a margin account, you're basically telling your broker, hey, I know what I'm doing. I'm not going to blow my account. And so what the broker says, okay, you have $10,000 worth of stock you can buy based on your $5,000 deposit. However, we need your account not to drop below $7,000, right? So you buy your stock, you have $10,000 worth of stock, right? The broker is saying, look, just the value of the stock you just bought cannot drop below $7,000. If it does, then you get what's called a margin call, right? And that's where in the third bullet. So the two actions that are triggered here. When you get a margin call, you want one response is you can deposit more funds to bring your margin back up to say 7,000. So let's say you're at 10,000, you pick some terrible stocks or some terrible crypto, and it dropped down to 6,500, right? The value of your stock or crypto. At that point, you're gonna get a margin call because you're below 7,000. Now you can deposit $500 to bring your margin to meet your margin maintenance margin required of 7,000. But if you don't do that, what the brokers do, they will instantly what's called forced liquidation. This is utterly painful. Because what they're doing.
Leon, hold on real quick before you say this. When I started my career, for anybody, it's just a fun little point to know. I actually was one of the people that had to call individuals and tell them we were instituting a margin call. And when I say choice words have been heard, oh my gosh, it's very real. So that was a fun little fact. Like I used to handwrite these things out and call people. That's how old I am. But go ahead.
Yeah, margin calls are painful. So, but like Brent said, so there's two things that happen. Some brokerages, like when Brent was doing, they will call you or send you an email and say, "Hey, you're in a margin call. You have by the end of close of business today, you need to deposit a certain amount of money to bring your account to meet your maintenance margin requirement again. So again, if you have 7,000, your account dropped to 6,500. You need to deposit $500, right? Those are the friendly brokers, right? That's they're doing you a favor. Some brokers, like Interactive Brokers, the one I use, they do what's called forced liquidation. They don't tell you nothing. If you hit that maintenance margin threshold and go below it, they instantly, indiscriminately sell your stock. Just, I mean, you can be down, if you're down on, if you're down 10, 20, 30% on stock, they do not care. They just sell until they get that maintenance margin back to $7,000, and then they stop selling.
And real quick, Leon, let me jump in. Number one, that puts you in a dip, but Leon's about to talk about that, I'm sure, so I'm not going to talk on that. But I am going to say there are some brokerage accounts that require you, and I'm not sure if they still do it like they used to, but they will require you to link your brokerage account to your bank account. And some of them will instantly just take money from your bank account or liquidate the stock. So there are some that still do that.
Yeah, I didn't know about the I never heard of the linking the account. That's better than forced liquidation.
No, because
no, it's not.
But think about they pull, and I've seen this happen. I've seen people have their accounts drafted, and they had a mortgage payment that was scheduled to come out. That was a totally wrong statement. Yeah. Somebody pulling money out your account blindly is not a good thing. It's all bad. It's all bad.
Yeah, it's all bad. Yeah, it's all bad. Right. It's all bad. Yeah. But the worst thing about forced liquidation is, the one thing about stocks is you can hold them into perpetuity, right? Like once you get down 10, 20, 30%, you can say, okay, I'm gonna hold this for the next 5 years, 10 years. I have time to come back. Well, forced liquidation, you don't have the time because you can be down 30% in the stock and in a bunch of stocks, and they're just gonna sell till they reach that maintenance margin requirement. So you just take massive L's, massive losses in your account when you have forced liquidation. Now, I'm not trying to scare people away from margin. All I trade on is margin, right? That's all I do. Because again, as you see at the top, you can deposit however much money you deposit, you instantly double the amount you can buy, which doubles your returns, but also can double your losses, right? And then of course we have the whole thing about margin call. So you have to know what you're doing when you invest on margin. So okay, how this relates to everything that happened last week with crypto and back in 2020, March 2020. So what happens is that forced liquidation. Now imagine this. Imagine forced liquidation across 50 brokerage houses, across 20,000 clients, and across hundreds of millions or billions of dollars. All that forced selling completely drives the market lower. Like the last bullet, a massive automated selling drives the market down very, very, very fast because you have automated indiscriminate selling. They're just hitting the sell button, and the price is just dropping. And that's when you see these huge drops in the market that are 10, 20, 30%, depending, in crypto, and maybe anywhere from 3 to 8% in the stock market. When you see those type of moves, that's forced liquidation that's happening in margin accounts. So last week, what happened with crypto, there was actually $12 billion worth of forced liquidation in the cryptocurrency. Sorry, actually in Bitcoin. That was Bitcoin alone. There's probably maybe 3 or 4 times that across all of crypto. But in Bitcoin alone, last week, $12 billion of forced liquidation happened in margin accounts because again, these people were in Bitcoin. They fell below their maintenance margin and instantly. And if you remember the thing about last week with the margin, with the drop last week and the drop in March, is how fast the drop was, right? So if your maintenance margin is $7,000 and the market is just absolutely imploding, and you go from $7,000 maintenance margin down to like $4,000, the whole value of your account, you just blow through that $7,000. They're gonna sell another $3,000 or $4,000 worth of stock to get you back to that maintenance margin. So I mean, it can just decimate accounts, and this is what happened last week to a lot of people that were in crypto, that were leveraged, that were using margin, that didn't know what they were doing, probably had no idea what even a maintenance margin is, and just figured, I got double my money. It's a party until it's not, right? And so a lot of people got burned.
People with options too. It's like a lot of people with options who, when everything's going great, they're like, oh yeah, I'm in options. And the second the volatility kicks into the market and things change, they don't know how to change their strategy. It's everything's great till it's not. And this is one thing Leon and I preach. And for those of you all who aren't members of IA, I really suggest you think about membership very seriously, because we're talking about your money. We're talking about your future. Or join a group, and not even if it's not ours, just a group that's has intelligent people, really looking out for your best interest. Because when you think about the fact that you're using $5,000 of someone else's money, that sounds great when you think it's a sure thing. But again, when you have a correction in the market or some unanticipated government regulation that comes out to affect your cryptocurrency or stock or whatever happens, if it's a short squeeze, whatever, and all of a sudden, the value goes down and they indiscriminately start selling off your position, they're selling in a dip. Everyone knows the whole point to investing in the stock market is to buy low, sell high. But now, not only are they selling in a dip, if you're an educated investor, or you're reasonably aware that in most cases, when there is a precipitous drop in the stock price, more than likely the next 2-3 weeks, you're going to see the stock price increase up to like 30% of whatever the fall was, or 33%. You aren't in the stock anymore. I mean, in some cases, your position is cut in half or eliminated. So not only did they sell in the dip, you're still responsible for paying, and you got to watch it all happen. And so, this is one of the reasons why too, when you hear me and Leon talk about the fact that, I look at stocks differently than him, because I'm not doing margin investing most of the time, and he is. So he can go more conservative than me and still get the return he's looking for. Where, I need to, I'm in the stock fully. So I need my returns to be higher. And so, but when you look at how he's leveraging his money, it really balances out in the end. And so just understanding your style and what you're willing to accept as risk is hugely important.
Yep. And then, so anytime that you see a market correction in crypto or in stocks, that's a really, really big, like forceful drop in the stock market. 99% of the time, that has to do with what we're talking about here, margin calls, where people are forced liquidated, and the brokerage is just indiscriminately selling their stock. And remember, this is across a whole ton of brokerage houses and a whole ton of clients of theirs. So this isn't just like one or two people. These are thousands of accounts, hundreds of millions or billions of dollars that are just being forced liquidated. That's driving the price down. And that's what we saw last week with crypto, down anywhere from 20 to 50% last week, depending on what coin you were in. Bitcoin alone had $12 billion of forced liquidation. Across all of crypto, it was probably 3 or 4 times that big. So,
and also too, in that space, sometimes the people who are in margin are sophisticated investors. For everybody listening to the podcast, I just did air quotes. Sophisticated investors, and they believe they know exactly what they're doing until like a real market situation hit. Leon and I have been through like 7 market corrections that have hurt pretty badly. And at this point, we know very quickly how to not only navigate through these times, but to profit from them. And times like this really separate those novice from those who are experienced. But I say that for this reason. If you're in this, you have to understand the ripple effect of what occurs. It's this automated sell-off, right? And all these accounts are being liquidated, indiscriminately liquidated. So people are panicking. So what happens is many of these investors now have to go liquidate more of their money to just get to change positions or to gain back the position they feel like they lost, or they go take out a loan somewhere, or they go. They're trying to figure out how to get back in, or they're devastated that they got hit. Some others plan accordingly. Then you have the retail investors, and you talking about those new retail investors. Only thing they see is the ripple effect of the market going down, or this particular stock or cryptocurrency going down. They don't know anything but to panic. And they just go, well, I don't know what's happening, but I'm getting out of here. And then they panic and they sell off. Emotion triggers so many people to make bad decisions in the stock market because they don't have anyone who's helping guide them through those troubled times. And, again, retail investors aren't even in margin accounts, but they just see the effects of margin accounts, and they don't even know it's an effect of a margin account. They just see a stock or crypto go down in price, and then they bail because they don't know what's happening, and they don't want to get caught at the tail end of it. And then, of course, what does that do? It drives it down even further, even faster. And then people like Leon and I are sitting there going, "It's a great buying opportunity." I mean, we were sending like shots of our cryptocurrency accounts last week to our group. Like, this is how much we're down. Why are we so excited? And we were just preparing our other money to take advantage of the situation. And many of the people in our group, we all, because we were having the conversation while the market was going down, started positioning ourselves to increase our position. And so also too, you got to think when these people are in these margin accounts, there's a taxable event from, being in these accounts, even when it's doing great. And so, we always talk about attorney Beverly Winstead, but it's very real. She's a tax attorney. And again, this isn't even like a plug on purpose. It's just real. If you're in a margin account and you have an intraday trade, that's going to be short-term capital gains. So, how are you accounting for the taxes in that? And so it's just a lot to think about. And then if they liquidate your account, how are you, trying to capture loss? Because it's there. So, might as well do something with it. It's just a lot of things that if you're investing, you really should be talking to a tax attorney. And, I'll say my personal promotion is, you should contact attorney Beverly Winstead from the law office of beverlywinstead.com, because it just makes sense.
Yeah, and it's a good point, because they'll liquidate some of your positions up until they get you back to the maintenance margin. Yeah, but if you're profitable in those positions, yeah, that's a taxable event. And if it's short term, if it's less than a year, that's short term capital gains. It's a taxable event you didn't plan on, because you didn't plan on selling. You were forced out of the position. So yeah, like I said, you definitely these are things you have to keep in mind when you're looking at doing trading on margin. And these are the effects margin has on the market. In that, again, last week crypto was down so big because of all these forced liquidations that happened in the crypto market. And again, back in 2020, March 2020, when the market tanked, I mean, people got dead, because I mean, the stock, like crypto is known to drop like that. The stock market, I remember back then, it was going down 10, 12% per day. That just does not happen in the stock market. And I remember, and also remember, this was the fastest drop in the history of the stock market, 35% in 30 days. So people that were on margin, they were just getting liquidated day after day after day after day. I mean, it was painful for a lot of people. But so the moral of the story is, if you do margin, definitely do your homework on trading with it. I trade on it personally. I've been through margin calls. I've had margin calls. I've had my account liquidated to some extent. That's how I, learned how to deal with this. It's painful as hell. But like anything, it's a learning process. But now I understand the mechanics behind liquidations, margin, and how it can really, really affect the market, especially on those big down moves. So just know, next time you see a big drop, think margin calls and what's going on kind of behind the scenes. Not just that, it's dropping for no reason. No, there's always a reason why these things happen.
Yeah, and it's in the group later on, for those who are part of the IEA Crypto Bulls, I'm going to share one of the cryptos as soon as we get off of here. I just looked at my account, and there's a cryptocurrency that's up 66.72% today. And so, I mean, these things just don't happen anywhere. Again, 66.72% today. And
I had one. I had one that was up 108%. I think Monday. Monday, 108. It was 99. Then it went to 108. I think it settled the day out at up at 70-some%. I mean, it's crazy. I mean, I basically made back the loss from the prior week, and then I was building upon my profits after that. So yeah, I mean, crypto's it's fun ride.
It's yeah. So with that being said, we owe you all 2 stock picks. Leon, is there anything I missed before we dive into the stock picks?
I know a lot of people had questions about what is margin, how does it work. This was just everybody know, this was like a high overview. There's a lot more beneath the surface on how you actually handle a margin account. This is very, very, very high level. This is more conceptual, but there's a lot of stuff underneath that you'd have to understand as well before you trade on margin. But this is explaining how margin calls bring serious volatility to the market.
Yeah, and for anybody listening to the podcast or listening to us right now, we're not endorsing the use of margin accounts. We're not saying that this is suitable for all investors, but for some it is. And you have to be familiar with your own situation and do your own research to determine if this is suitable for you. Like Leon said, he's been investing in margin accounts for, year, like, can I say a decade? Like, It's been
No. Margin has been like 5. I've been trading leverage. So options are leveraged assets. So I've been trading leverage for probably about 6 years, 7 years, and then trading on margin with stocks about 5 years.
And for me, I started my career in 2001, writing out and calling people who have margin calls. And so, I've been reviewing these accounts since 2001. I was doing it for like 2-3 years, and then I moved away from it. But again, just showing that we have a lot of experience with margin accounts, so it's not new for us. And we definitely understand that there are very serious risks that come with this. And I'm saying this as like a PSA, because some of you are going to just read that first line and go, 5,000 gives me $10,000 in investable assets. I'm all in. Like, I'm doing this tomorrow. And then that margin call is going to hit and something is liquidated and your feelings will be crushed. So please understand, this is not suitable for everyone. You really need to do your research and or consult a professional before just diving blindly into margin accounts. All right, so with that being said, I'll go first. So my account today, my stock pick today is Skyworks Solutions, and the ticker symbol is SWKS. Again, it's Skyworks Solutions Inc. SWKS is the ticker symbol. It closed today at $168.85. Now, I'll read the profile for you all. Let me see. It basically, this company works and manufactures products and proprietary semiconductor products, including intellectual property in the United States, China, South Korea, Taiwan, Europe, and the Middle East, Africa, and Asian Pacific. Its product portfolio includes amplifiers, antennas, tuners, Long story short, we are in and moving towards a semiconductor shortage worldwide. And you have companies like Tesla now pre-ordering semiconductors just to secure semiconductors for their cars. There are plants all across the world that have had to shut down and are losing billions, yes, billions per month, because they cannot produce the goods they need to sell because of the shortage of semiconductors. So, this market is going to be huge, and there's no guarantee like who's going to win the most in this. I think there's some others that are very well positioned, but Skyworks their market cap is roughly $27 billion. And I've been watching this company for, I gotta check my date, since actually about April of last year. So April of last year is when I first started watching the company. And let me see, get back to the company's financials. They do pay a dividend. And it looks like over the last 5 years, they've gone from roughly about $74 and now they're trading about $168. So it's been an absolute growth in the marketplace. There's just an overwhelming need for semiconductors. And I thought it'd be a good pick for me today.
All right. So my pick is Zscaler, ticker symbol ZS. And I'll just read a little bit about them. So they're responsible for securing more than 400 of the Fortune 2000 companies. These organizations and others are running some of the world's most complex networks, realize the benefits of Zscaler's cloud delivery. So basically what Zscaler is, they're a ground up cybersecurity firm that specializes in the cloud. So back in the day, most companies, they had servers on site, and then they would then buy software that they install on those servers to secure their internal networks. Well, now today, most companies, when they launch applications, they launch them in the cloud. Google Cloud, Microsoft Azure Cloud, Amazon Web Services. And those applications need to be secure because, again, they're not on site with the company. So a company like Zscaler actually secures cloud-based applications for other companies. And so, they're very, very cutting edge for cybersecurity. And I would imagine most of us know about the recent cyber attack that happened on the gasoline pipeline here on the East Coast that shut down. It supplied like 80% of the gas up and down the East Coast. It was shut down for a couple of days. People lost their mind. A lot of gas stations ran out of gas. It's really like a national security issue and an energy issue. So, kind of with that in mind, we all see how important security, cybersecurity is. and Zscaler is, the forefront of these new cybersecurity companies. So,
real quick,
Yeah,
from sources we both know, it was not considered a national security issue because it went to a private company, and it was software based that was directed at malware versus it being something that was a threat to the U.S. government. So
yeah, not to the government, but
yeah,
the
but
Biden administration came in and said now that these pipeline companies now have to report any attack they have, any cyber attack, to the federal government.
Yes,
so they're
report.
Yeah, they're not taking over the networks. No.
Yeah.
But they're saying they looked at it as, well, at least they said they look at it as more of a national security issue, because again, it's almost like it's basically an attack on U.S. infrastructure. Now, like from the classic standpoint, no, it wasn't a national security issue. But kind of in the real world, it kind of was.
Yeah. So sources close to us, but just want us to correct that.
I know the source. Yeah, I know. and hey, I'm not arguing with the source at all. So, so a little bit about their numbers. Last 3 years, they've been growing their revenue at 50% per year, and on average, they've been growing their profits at 87% per year. So a growth company that they're not profitable. Well, they are profitable. We'll say most of their profits actually came. 2020 came last year. The 2 years before that, they were not profitable. I think they were slightly profitable or just below profitability in 2019, and then 2020 when they really blew up. So that average is a little skewed at 87%. But over 3 years, on average, that last year really blew them up as far as profits. So again, average profit revenue growth 50%, average profit growth over the last 3 years 87%. And that's Zscaler, ticker symbol ZS.
All right. So again, the picks today were Zscaler, ticker symbol ZS again. And then we have Skyworks Solutions, ticker symbol SWKS.
Again, just one other point. Real quick, Zscaler is up over 100% over the last year. It's trading at about, I think, $194.
Oh, awesome. So everybody, definitely thank you for being with us. Do your research on everything we talked about today before diving full in. This is one of those episodes I know is going to spark curiosity. If you do have curiosity about what we talked about or about Investing Education Academy as a whole, you can join our Facebook group. We're 400 plus strong and growing. So it's just search Investing Education Academy and we'll pop up and you can join our group. If you like to join our paid membership site, you can go to investingeducationacademy.com and you will find all of the membership offerings and choose the one that makes the most sense for you. So everybody, definitely want to thank you so much for being with us, and we will see you next Wednesday. And for those of you all, I said I'm going to post this cryptocurrency that has returned 66% today inside the IA Crypto Bulls platform. I'm going to do that right now. Have a good day.